Good day to have you on the show, sir.
Oh, hi. Well, thank you for having me.
So gracious to have you on the show. Now, Prof, straight to our discussion point. Hello, Prof, are you there?
I'm listening.
All right, so
I'm hearing you.
now let's take a look at this risk management system that CBN is emphasizing right now for all banks. Can you help us to understand this risk management system that CBN is bringing on?
Oh, quite a lot, actually. Remember, over the last 3 years, CBN has been focusing on price discovery, stabilizing the forex market, adjusting the rates, and attracting investment, especially the foreign portfolio investment and all of that. And then it moved on over to opening up the space for other operations like BDCs to enter the fray, and then brought in for forex codes to manage them. I think now is now focusing on more regulation. And these regulations are to look at the day-to-day issues that we face in banking, especially in mobile banking area, and then also to look at device policies and things. So they've now come down to brass task to open the space to ensure even more cashless implementation and all of that. So first of all, he looked at cash withdrawal limits. You know, in the cash withdrawal limits, it used to be 100,000 naira. They increased it to 500 though, but in increasing it, they're still reinforcing a ceiling. So that ceiling of 500,000 is they're reinforcing it so that you don't go ahead to encourage people to start hoarding cash. So while at the same time easing the access to cash. So that has been one very welcome, really very, very welcome development. Now it all faces the problem we face with POS terminals. Now, you know, in POS, there is what they call dual connectivity, because once you are working with one POS, either trying to draw money or to put money, sometimes the network fails. So it depends on the network that they are using, whether they are using UPSL or whether they are using NIBSS. So they now want them to have two, so that at least if this one fails, the other one continues. So it helps both the SME that is doing the business and also the small financial POS operator that is also not losing revenue. So it's very, very welcome development in respect to both parties. Now, there are other areas too that, for example, single device. This single device is on Friday, I wanted to move I got a new phone and I transferred everything to my new phone. But then I wanted to get the app for the Fidelity Bank transferred there. And I noticed that it couldn't operate in two machines at the same time. So when I succeeded in transferring it, it blocked the other one. And then even as I succeeded it wouldn't let me take cash more than 50,000 naira. But now this new policy has restricted it to 20,000 naira. So it is like creating a cooling off period for you to for the bank to also react, because bank needs to be aware of what has happened, and then in case it's being used for fraudulent purpose. Can you imagine if somebody has your password and then he goes and he tries to install the software in his own computer and then implement your password? So you can only take 20,000 before which you'll be cut out. So all that kind of thing are some of the things that is doing. Then there is the real-time monitoring. You know, this anti-money laundering policy. The anti-money laundering it is now brought in real-time monitoring. So if there's any suspicion of any anti-money laundering, or if you have any cash huge cash beyond certain limits, or either in and out, it will be reported real time. So that again is very important. Don't forget that we have just been removed from the blacklist of the Financial Action Task Force. So these are some of the measures that are giving them more confidence that we are doing something, to improve our rating, and so it's very, very welcome. You know, these things, what it is really is that the central bank is navigating through a period of intensive regulation. And the purpose of those regulations are to ensure that they can stabilize our economy and at the same time secure the digital financial landscape. Because we're all going digital by the day, but you have to secure this landscape of digital literacy and digital intervention. So that is what the whole purpose is, since to increase more confidence in people to use digital instruments, and then also to make sure that the custodians of these instruments are able to react real time. So that is the main purpose of some of the policy.
Yes, sir. But Prof, let's quickly take on the issue within that policy. First, the restriction on borrowers who have now become a situation whereby CBN now consider that their loans are non-performing loan. According to CBN, about 7% of those loans have now become an issue. But for you, wow, can you take us through on why CBN have to come back? Because in 2024, they did the same directive and we didn't hear anything from them, but now they are coming back to take the same directive. What have changed?
I think even before that, there's even the opt-in, opt-out policy where you can opt out of direct payments. For example, if you don't want your system to be debited online, you know, it's like, so you can opt out.
Exactly.
So if somebody wants to take money from your account or put money in your account, you better go to bank or find other ways, but not to be doing these things instantly. So it's not everybody that is comfortable having big amount of money in an account and transactions are going in and out. So that's one. Then it comes to the non-performing loan. You know, non-performing loan is a major financial instrument for maintaining financial system stability. And don't forget that is a core mandate of central bank, to maintain financial system stability and then to maintain price stability, which is the inflation-related one. So in the case of there are certain instruments that they use. One of them is the non-performing loans, where they expect, as part of the prudential guideline, that the banks shouldn't have more than 5% non-performing loans. And then so they've worked on them and they have come down to reasonable. A lot of them are actually around that 5%, or some are even less. Then there's another one on capital adequacy ratio, which ensures that they have enough capital to protect depositors and all of that. They also have joint supervision with NDIC, scrutinizing banks every month, risk-based bank supervision. So they have so many of these instruments that they use to make sure that they monitor the health of the banking sector. So this is one of them, where they are saying, okay, and they forget that there are even instruments like it's the bank that brought in BVN, and BVN allows you, is part of the KYC, know your customer, and then it also allows banks to use the same BVN to look at your account all over the banking sector. And even the other one that they have too, when it comes to if you owing them and you're refusing to pay, and for some reason they can actually apply to central bank to give them access to permission for them to deduct whatever you are owing them across all sectors, all the banks where you have your money. Anyway, so this is one of the. So the thing is people that we have credit registers, and this credit register is where everybody and every company, they have their credit records. And what it's trying to say is that, just to avoid systemic failure, you can owe money to different banks, and then when you are defaulting, the other banks may not even know that we are defaulting, and then they keep on giving you credit, or they even know that you have defaulted, and then they're still giving you credit. So here is trying to block those, and it is doing that by letting the others know from the credit bureau that you are owing money and you have defaulted in that, so don't give him loan. So go and clear the other one, or come to some arrangement. I mean, we have this abroad as well. When you are in credit, when you are in debit, serious debit, and you are defaulting, then you have to come to some arrangement on repaying the loan, and they will have a restricted access for you to borrow. So it's all part of the credit risk management systems that they are just trying to enforce.
Exactly.
And it all works out to the good of both the customer and the banks themselves, because you could have a major catastrophe in the banking sector if you don't have these obligor limits.
Interesting. But for the CBN governor who came up with these rules and regulations that many have seen as opportunity for us to strengthen our financial sector, Steve mentioned that the Nigerian banking sector, as good as it is, still needed more rules and regulations to make it more stable and more stabilized. Although on the other hand, many are still saying that the CBN needs to also come a bit flexible. But what do you make of this aspect of this hawkish regulation measurement that CBN is coming with? Meanwhile, others are saying that no, CBN still soft-pedal a little. All these tight laws are not necessary, but we understand what you are doing. But can you help us understand that aspect of that hawkish stand of CBN for today?
You know, banking regulation and of course customer behavior, especially in a digital environment, is a moving target. The issues are changing every time, and don't forget that our people, not just our people, are very used to circumventing laws and regulations. So you have to constantly be on the ball, finding out where the loopholes are, seeing those who are exploiting them, and plugging those loopholes as you go along. So it's not a big deal, but it is something that they cannot look away from. So, and if you don't, by the time you realize the loopholes you have, then one or two banks would have been affected. And this is that's one of the things the goal of this restriction is to prevent contagion effect, where a single massive default in a bank can ripple through multiple banks. So that's part of to maintain financial system stability. Anything that could rock it, the CBN is always up and running, trying to block the loopholes and sanctioning banks. Go and look at hundreds of billions of naira earned by central bank from penalties, because it doesn't spare the banks. It penalizes them, and then and as soon as it penalizes them, it deducts it from their CRR, and then they have to get a notice to replenish. So it doesn't joke with those, and they know, and that's why we praise the bank for protecting customers.
Exactly. But for the CBN governor also, he said something very strategic. I know you may also fell in line with him on this. He said we want to curb credit abuse in our financial system. Prof, how long have we been having this issue of credit abuse by banks officials and their so-called big customers?
No, he has been dealing with this matter for some time. I don't know if you remember the First Bank, when they sanctioned the chairman of the First Bank, I think, for having credit. I can't remember again the real story, but these are part of the things. You have, every bank has their obligor limits. The maximum you can lend to a single borrower. Then secondly, there are sometimes some of the insider dealings will be such that some of the directors or people well connected in the company will present assets, the bogus value of assets. That when let's say, for example, somebody gets his asset valued at 5 billion, and then you lend them money based on 5 billion valuation, then only to find out that this asset is only worth 1 billion. What are you going to do? Because when they default, the bank suddenly loses 4 billion. So these are some of the things that the CBN is trying to avoid. And then also, when a loan is so big that, as I said, the contagion effect of those large loans is also what is trying to restrict. So once people are known to be defaulting, they don't give them additional credit. So that if it fails from one bank, then it continues to affect the others and the others. So it's a work in progress, but it's what the bank is trying to stop.
Interesting. Now, many have also argued that this latest directive from CBN is to begin to prepare Nigerian banks and Nigerian banks customers towards the recapitalization period, because the recapitalization period is just less than 11 days away from now. So many Nigerian banks are being prepared by this directive to prepare towards the utilization of that recapitalization exercise, because as we speak right now, CBN said 30 banks have met their requirement. Prof, what do you have to say about 30 banks meeting their requirement And this kind of directive are coming as a forerunner to when recapitalization period will not start fully.
Well, the major purpose of recapitalizing the banks is to build stronger banks that can give more credit. Rather than if somebody wants to borrow $500 million, then almost 10 banks gets involved in lending that money. But now you have stronger banks that one or two can give you that money without having to rope in all the banks. So secondly, when you are asking them to increase their risk and because they're increasing their risk capital, when you're asking them to, you also have to find out from them what are the sticking points, what are the areas the CBN needs to improve to enable them do better business. So these are where they are beginning to, because these banks are recapitalizing, bringing in more customers and bringing in more investors, and those investors want to see that the risk situation is being well managed, and then you can see that some of these measures are intended to transmit confidence to the investors to investing into the new banking system. So it helps them both ways, both the banks and the people. And also remember that we are now in a more digital landscape. So again, some of these are when you are having real-time reporting. No, that's very, very helpful. And then also, they're also watching things like cryptocurrency where they come in and then they cause havoc and all of that. So it's all part of it, it's all in the mix. So I have to congratulate Central Bank for what it is doing. It's just demonstrating agility. That is what it is. And having zero tolerance for corruption and all kinds of manipulation of the banking sector.
Interesting. Now for this, all right, for the CBN, they said the FX reform, the foreign exchange reform has brought over 200% capital inflow into the Nigerian economy. Prof, you have been following CBN for a very long, you know most of their internal working mechanism. But the current CBN-led management, how are they doing how are they achieving the success they are having at this point in time? 200% brought over when it comes to FX capital inflow into the Nigerian economy.
They're doing fantastically well, to be honest, because they took it on its stride. It was quite a tall order for them. They were very little time for consultation, and then they just said, okay, look, we want to focus on price discovery. They first of all have to focus on liquidating previous loans that were owed over $8 billion, and the airlines were number one in those loans profile. So they started sorting that out. And then for them to do that, the critical thing about foreign portfolio investment coming into your country is this. People go and borrow money in other constituencies abroad at 4%, 3%, and they want to invest it into your economy because they know that you can sell your treasury bills at 20% or 18% or 17%. So there's a big margin. But for them to do that, they need to be sure that inflation is under control. Because if you put some money and then 12 months later, the inflation has doubled, you've lost money. They cannot borrow money to come and lose money.
Exactly.
And then they will be liquidated in abroad where they borrowed the money. So first of all, they want to know that there is a conscious effort to bring down inflation to positive territory. Positive territory means positive, so where your lending rates shows a reasonable differential with the inflation. Inflation has to be below, otherwise you have a negative real interest rate. Then the second point is to also make sure that the foreign exchange inflow, because don't forget, foreign exchange is price, inflation is price.
Exactly.
And in any price consideration, demand and supply will play up. So that there was shortage of supply, so they have to face that supply. Of course, supply was going to come from forex, from foreign portfolio investment, provided their two conditions are met. Condition number one, inflation must be trending down. Condition number two, you have to give us a reasonable interest rate, which is why NPR rate had to be high. Condition number three, of course, is that there has to be a reasonable supply of forex to balance the thing. Because they can vanish any day. So they're also watching the risk in the system. So when they saw that the central bank is now receiving the revenue from NNPC, which they blocked during the last administration, so that was comfort. Then they also saw that serious measures were going out to deflate the speculation in our currency and all this dollarization of our economy. They had to attack banks' reserves of dollar to force them to 20% non-open position, net open position to bring more inflow into the system. So many measures that were being taken is to increase the supply of forex into the system. So they are comfortable with that. So they can bring their own too, because it's not just their own that they are relying on. Because if it's only their own that they're relying on, if anything, for any one small thing, they cannot vanish. And those who are slow in vanishing will lose their money. So that's the whole thing. So central bank was very, very mindful of this minefield, and we are navigating them with extreme caution. But the results were coming. And then you see the flip of our trade losses to trade balance, positive trade balance.
Exactly.
We have a balance of payment, negative balance of payment is now moved to positive balance of payment. Inflation is trending down. There may be some challenges this month, but at the same time, you also have forex steady. So once forex is steady, it's very important because you are removing the arbitrage in foreign exchange. We have a speculation that was driving the forex. People were betting on dollar and naira weakening, so they continue to hold their dollar. But now it's going between. Today it is a little bit cheaper from central bank. Tomorrow it's a little bit cheaper from black market. So they've removed those arbitrage, and now people are now being forced to sell their dollar because the naira rate is improving. So why are you keeping the dollar? So they are beginning to sell the dollar. So it all bodes well for macroeconomic stability. And the CBN cannot be faulted. They're doing extremely well, and we really encourage them to do more.
I'm talking about CBN doing more. Now we have achieved about 50.45 billion in our external reserve. So for CBN to do more, Prof, the question is, can they sustain this? Because CBN governor target is about 61 billion. For him, 61 billion before the end of the year. And federal government of Nigeria, President Bola Ahmed Tinubu is looking at so ambitious of getting close to 100 billion. But what do you think we can do to sustain this momentum going forward?
CBN could even achieve $100 billion reserve by 2030. So there's nothing stopping. After all, Nigeria has gone to $62 billion. Listen, in 2014, Nigeria had, no, not 2014, I think about 2008, when Sanusi was the CBN governor, we had $62 billion foreign reserve, and we have $22.5 billion excess crude accounts. So it's doable. The bank will achieve those targets. But let me tell you one more reason. You've seen the presidential order 009 that is decapitating NNPC. And I love it. And I think the new presidential people should go and make sure that they codify this and make it law. Because he has crammed down on the 30% of our profit crude to themselves, allocated to themselves, and 30% to frontier basin. And only 40% of those crude resources come to onshore to be shared by the three levels of government. So now we can be basking in the euphoria that at least 100% will come. So that means more dollar will also come in. So that's very useful. So the bank will achieve their purpose. And don't forget, Dangote also has stepped into the ring and said, well, I'm going to make sure from my proceeds coming on short to that we could hit 1,000 naira to $1. So can you see how encouraging private sector can stick out their neck and say, look, we're going to help you. And they have the capacity to do more. So it all comes down to the clement environment that is evolving, the macroeconomic stability that is evolving, and the fiscal and monetary policy handshakes that we're beginning to see take place in the economy.
Exactly.